So while the narrative in office continues to be negative overall, there are subplots within the overall story. So first, I'd like to suggest that rather than the focus being hybrid work schedules, work from home, really for American business today, it's about the economy and perceptions about economic growth going forward. We've already seen a slowdown in the pace of hiring, and that corresponds directly to office space demand. And consequently, the demand problems in the office sector as they stand today is really more about the economy and employment growth, much more so than it is about work from home policies that exist today and going forward. In fact, in work from home policies right now, there's clearly a trend towards more time in the office for the collaborative benefits that that brings. So really the biggest subplot of all is demographics. We've talked about this a little bit in prior discussions, but it doesn't hurt to emphasize the point again. Right now, you have the suburban population being impacted heavily by the movement of millennials. The push for larger space, the push for quality schools, the movement away from public policy in most of the big cities, the movement away from the crime trends in big cities is really having an impact on suburban growth, and this is a longer-term trend that is very much in play right now. In taking a look at transactions, we see another significant disparity that forms, and really what we see is the perception of investors. So let's look at the edges. At $25 million and below, in a suburban setting, we've seen transaction counts come down by only 17% when compared to a benchmark year of 2019. Comparing that same benchmark year, transactions $50 million and greater in the CBD, America's cities, you see a reduction in transaction count by 74% in that same comparison. That is quite a disparity and very telling in terms of investor perceptions about where the movement will be going forward. So to close out on the topic for today, there is one caveat that remains, and that's debt financing. The availability of debt financing is still very challenging in the office environment, irrespective of a $25 million and below suburban asset or a larger format asset in the CBD. So it is going to take diligence on the part of any borrower and their team arranging the financing to work through the challenges and make sure the story is as compelling as possible for the individual asset in question.